Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is Friday, December 30th, and we are heading into the very last day of the US trading session. We, of course, still have 2 more days in the crypto trading session for both the year and the month of December, but U.S. markets are going to close in several hours heading into the new year, which will give us pretty much the best picture of what things are going to look like on January 2nd, which is Monday. And we are, still on the cusp of where I am expecting some more volatility to occur. If you've been following our tracking of DXY, you'll know that pretty much, the bullish scenario that we had drawn earlier is more or less cut down. We are back towards the lows. We mentioned this 103.5, 103.4 level being pretty much the last support before things start to get hairy for the US dollar. And of course, the US dollar has pretty much been moving inverse to risk, meaning crypto and equities have been moving higher when the dollar moves lower. And of course, vice versa when the dollar moves higher. So if the dollar does move lower beneath 103.4.5, we can reasonably expect, it heading lower towards 101.1.2. And if that is the case, then risk should have a potential, moment to flourish. And it obviously, we've not broken the support level yet. So we are still hovering around that level. We could still see a catch higher. And we've been discussing this range for quite some time. So no real signal from DXY, but it is continually heading lower and definitely looking weaker in comparison to, our observations earlier in the week and, of course, last week as well. So something to look out for. DXY not looking very strong. We could see a reversal out of this, but it doesn't look very likely to me. It does look like bearishness is more or less the trend moving forward, but we'll have to see how this closes and, of course, opens back up Sunday evening in terms of futures. Looking quickly at sentiment, we can see Bitcoin daily sentiment has improved since yesterday. We are back towards that 63 level that we were at days ago. So, it's somewhat of a good sign, but trading volume and tweet volume are still down. ETH sentiment has spiked as well. Tweet volume has been up for the past several days, but trading volumes are still lower. So take that with a grain of salt, but definitely positive to see traders, of the opinion that Bitcoin and Ethereum may be forming at least some sort of short-term bottom. Looking at equities, we can see that what we discussed yesterday failed. We, of course, did move down to the 38.40 and 38.30 level, as I had mentioned yesterday. That's why patience pays off. There was no reason to get long at that resistance. Looks like a swing failure pattern here. And, of course, waiting to 38 to see how we reacted at 38.40 failed. We, of course, dropped to 38.30. And then, of course, overnight, we headed lower towards 3,800 before catching shortly after the U.S. market opened. So, again, very technically driven, although, we are kind of getting punted out of, direct range trading. We can see that this resistance acted as a good, stoppage to that motion. And, we're the range in which we're trading in continues to grow compressed, which should eventually breed more volatility. If 3,800 fails, which it doesn't seem likely to do immediately, we, of course, still have 37.70 to act as supports, and we will have 38.30 and 38.45. Basically, this little area right here will continue to act as resistance moving forward. As you can see, we have confluence from both the downward trend as well as resistance, as well as the previous daily close, as well as this POC. So basically, this block of orders right here should act as some sort of resistance. And if you can pipe through that, of course, 38.45 will likely be your top of line resistance. And then you would need to flip that into support to then head back towards 38.75. So if you can't get above this block of liquidity, you're headed back down. If you can slice through this block of liquidity, you've got a good chance to hit 38.75. As for Bitcoin, again, very technically driven. When we talked yesterday, we were hovering, right around this 16,550 level. Of course, could not break higher above 16.6 and get to the 16.7 level, and subsequently failed overnight down to 16.3. If we zoom out a little bit, get a bit better of a picture. I know there's a lot of support and resistance lines, and that's because if you've been watching trading, we've been in these very tight ranges and been very technically bound. So, 16.3 definitely solid support. If I am a betting man, this is still, a bit of a head and shoulders to me. And I do think that we would probably slide down to some degree, maybe swing failure pattern back down here. I would be shocked if we didn't at least test 16K at some point. Maybe 15.6 is a little bit overextended. We are, of course, a bit oversold here, but not seeing a whole lot of buyers step in, and we're not seeing any momentum out of these, minimal increases that we've been seeing throughout the past week. So I'm not extreme, although sentiment is bullish and we do have this daily close here. Could we tag that? Certainly, but I would definitely think that we would probably meet the low of of the end of November before heading higher towards the high of December. So that's just kind of more or less my opinion. We do know the levels that we need to break in order for either way to happen. Of course, if you can get above 16,550, you've got a path to 16.6, 16.7, and of course we do have this POC up here with a large block of liquidity. With a large block of liquidity sitting just underneath 16.8. So, definitely a lot of work to get up there. But, if you can get above 550, get above 6, get above 7, you've got a chance. And of course, alternatively, get rid of these. If you fail at 16,550, you're of course back down to 16.3 pretty easily. And if you fail 16.3, you're at 1600. And if you fail 1600, you are at 15.6. So I don't have a very good read here. Probably best to stay flat heading into the week, unless we tag a high or a low in a very quick fashion. Meaning if we tag 1600, probably a good long, with this quick recovery. Or if we tag, 16.8, 16.9 relatively quickly, probably look for a good short. For Ethereum, very similar. Of course, nothing has changed a whole lot between Bitcoin and Ethereum. And if we look at where we're trading yesterday, trading at about the same place as we are today, does look a little bit, potentially some divergence forming. Nothing extremely clean, and we're still range bound as we have been since Tuesday. Haven't been able to confirm above 1200. Haven't been able to pretty much confirm below 1190. So pretty much a $10-15 range for Ethereum for about 3-4 days. So like I said, got to get above 1200 to head higher. Got to cleanly get above 1190 to head lower. We have support at 1165, 1170. We also have support at 1150 and down low. So if Bitcoin is heading to 16, Ethereum is probably at 1150. And if Bitcoin's heading to 16.9, 16.8, Ethereum's probably headed to 1220, 1230. And of course, like Bitcoin, we do have this block of liquidity sitting here to act as resistance. We do have a gap here in this liquidity. So, could we see something like that where we tackle that liquidity, get rejected, head back lower to 1170, and then maybe have a rise into the early part of next week? That's certainly plausible. So something we'll definitely have to look out for if we do get that rise. And that, like I said with Bitcoin, if we get a quick rise up to the highs, up to the recent highs, I should say, probably a good short. And if you get a quick dip down to the lows, probably a good long based on the volatility that we've been seeing. So looking at next week's economic calendar, nothing extremely important. Of course, we'll have jobless claims as we do every week. Non-farm payrolls will be interesting, as well as unemployment rate. That'll definitely be an interesting one towards the end of the week, because unemployment rate is a key aspect of the Fed's job. they want to keep inflation down and manage unemployment. And unfortunately, to keep inflation down, unemployment has to stay a little bit high. So we'll have to look out for that. And we'll continue discussing how unemployment rate may impact prices next week. But right now, the big sign is the dollar looks weak. We have no new lows in equities or crypto yet. Of course, over the weekend, could crypto see some weird volatility? Sure. But, if we think about the last few weekends, very flat trading range. Just the last 2 weekends are literally these sections right here. And then, Saturday to Sunday. So, very flat. So the fact that we have, if we don't see really any volatility heading into the daily close, I'm not going to really expect a whole lot out of the weekend. We could, for Bitcoin, you could sit in this area the whole time. And for Ethereum, you could sit in this area the whole time. We've seen that happen multiple times. So not expecting a whole lot. I just definitely think the most interesting things out of heading into the new year is the dollar looks weak and sentiment is flipping positive, and we haven't made new lows yet. And, there's a lot of shorts still open. So I think it's going to be very interesting to see what happens in the early days of the new year. We could certainly still crash and burn, but the fact that we haven't yet is definitely room for hope heading into the new year. So no longs, no shorts, but things are looking better than I thought they would be, late last week or early this week. So good luck, happy trading, and happy new year to everybody around the world who is celebrating. And congratulations for making another revolution around the sun. Stay safe, and looking forward to hopefully a much better trading year with the start of 2023. So good luck, happy trading, and have a fantastic weekend, everybody.